Hello, everyone. I must say, when we started doing these videos, we had quite a discussion about what music we were going to have at the beginning, and we kind of all agreed on the music that we chose. But I have to admit, it's starting to grow on me. It's it's kind of catchy. Anyways, uh, getting down into business. So I don't think any of you here are here to listen to about my opinion about the music we have. We're going to talk about private healthcare plans. A few years ago, that house hasn't always been around. And I keep saying it's a recent addition to the Income Tax Act, but in fact, it's several years ago. So it kind of talks about my age here. Um, but if you're in business and you pay to a private healthcare plan, such as Blue Cross or something like that, whatever you pay to the private healthcare plan is all tax deductible as a business expense. Now, the reason I made a session out of all of this is because there's also something called the health spending plan. And what that is where you kind of send money to the insurance company to cover to cover the cost of the plan. And I'm going to explain to you in a few minutes how that works. But before I dive into that, I want to maybe just talk a little bit about what is a medical expense. So just so you know, all medical expenses that you have can be claimed directly on your tax return. So it doesn't need to be run through your business. And so anybody can claim medical expenses. So I want to spend just 2-3 minutes to talk about what is a medical expense, what qualifies as a medical expense, because it'll play into my presentation. So medical expenses will include things like prescription drugs. So anything that you buy that's prescribed by a doctor by way of drugs would be deductible. It also covers things like eyeglasses, hearing aids, walkers, wheelchairs. So anything that helps you walk, talk, see, hear, all of those things would all be a medical expense. Medical expense also includes any premiums that you would have paid to any kind of a medical plan. So let's say your spouse is a teacher or whatever profession and is paying some kind of a medical plan, whether it be dental or medical, whatever they pay towards the medical plan is also a medical expense. Anything paid to any doctor, so dentists, eye doctors, hearing doctors, anything you pay to a doctor is also a medical expense. And finally, especially for those who are living out of town in the country, where you need to travel more than 40 kilometers to get to a doctor, dentist, or whatever, the travel can be claimed on a per kilometer basis. So if you're staying in whatever town and you need to travel more than 40 kilometers, so let's say you live at 100 kilometers from the nearest hospital or clinic, the travel there, the 100 kilometers there and 100 kilometers back would also be a tax deductible, or rather a credit tax on your tax return. So when you do your tax return, how is this impacted on your taxes? So Rémi's going to put up a slide here and I'm going to speak to it. So the first slide is going to show you how, when you claim your medical expenses directly on your tax return, how it impacts your tax return. So let's just say, for example, you have $1,000 of medical expenses. And again, I've just described what makes a medical expense allowable. And so if you have $1,000 of allowable medical expenses, the first thing we're going to do when we do your tax return is we're going to subtract from that 3% of your net income according to your tax return. So let's just say you're earning $30,000. We're going to subtract 3% of that, being $900. So what you get to claim on your tax return will be roughly $100. And the non-refundable credit you're going to get out of that is somewhere in the vicinity of 25, 26%. So in this example here, I use 26%. And so therefore, what you're going to save is about $26. Now, the problem with medical expenses, to make things even worse, is that it's a fairly complex schedule to complete. And so most tax preparers will charge you a bit of a premium to prepare the medical schedule. So at our firm here, most medical schedule will fall between $15 and $25. So if we were to charge you $25 to do your medical expense schedule, then in this case, you'd be saving yourself $26. Our charge is $25. So you're ahead of the game by a whole buck. So obviously not terribly enticing and not all that exciting. So the second option, if you're self-employed, now if Remy, you could go to slide 2, is you can claim this on a health spending plan. And the way it works, and there's several plans around there. One of the most popular is probably Olympia Trust, is the one that's most widely used, but there's several, and I'm not advocating that one more than another. But the way they work is that you would accumulate or compile all of your medical expenses, the same expenses that you would claim on your tax return, and you send them to that insurance company. So you would send them $1,000 worth of receipts, and along with those receipts, you would send them a check for $1,000 plus an admin fee of, it's generally between 5 and 17% is what I've seen. But generally, most of them will charge around the 10% mark. So you would send them a check for roughly $1,100. And then a few days later, you will get a check back from the insurance company for $1,000 for the medical expenses. So basically what you're doing is there's no premiums for that health plan. And what you're doing is you're giving them the money that they need to cover your medical expenses. So where it becomes really cool, in this example here, you'll have sent them a check for $1,100. They give you $1,000 back, and you're saying, well, what have I gained? Well, what you've just done is you've managed to create an expense of $1,100. Oh, I forgot to mention at the beginning, if you have any questions, please forward the questions via chat as soon as possible, because at the end, I will take a minute or two to answer any questions. So please start sending them off. So going back to my example, we've got the $1,100 worth of a claim that you're going to claim on your tax return as a business expense. But in this example here, the $1,100 will save you at least 20 to 35, 36%. And the reason it's higher is because being a business expense, you also save the CPP on it. So it brings you up to closer to 36%. Now, if you're in a higher bracket, so let's say you're earning closer to $70,000, $80,000, then you will possibly be taxed at closer to 40, 45%. So the savings could be even greater than in this example here. But here in this example, I chose someone who was also in the lower bracket. So we can compare oranges with oranges, such as in the first example. So we've got 1,100 times 36%. So what you will end up saving in taxes is $396. So yes, we have to concede to the fact that it did cost us an extra $100 to pay to the insurance company for the admin fee of $100 in this example. But you are ahead of the game by $296 versus the $26 in the first example. So one of the things that I recommend whenever people go into business is that they consider having a health plan where they can claim a cost plus, where they can put all their expenses through and send them to the insurance company and then receive a check back for the entire amount. And the other beauty of that plan is that you can decide who's going to be part of that plan. So you can get semi-creative, and depending on which plan you work with, you could have it eligible for yourself as an owner as well as your employees. And you can have different limits. So what you can do, and unless things have changed, I'd have to research it, but not that many years ago, and I still think it's the same today, is you could have different limits for different groups of people. So you could say to, for example, if you're dealing with Olympia Trust, you could tell them, well, for the owners of the company, being me, I will have a $10,000 limit. But for all other people on my team, I will put a limit of 500, 1,000, whatever you want to cover for them. And then the beauty is that you can now advertise when you're looking for people to hire that you do have a health plan. And it's actually extremely efficient, because if the employees don't use it, it's costing you nothing. And that's the advantage of a cost plus or a health spending account rather than a natural insurance plan, is that it has the advantage of, possibly saving you money because you may not necessarily have to disperse if it's not being used. So, Kayla, any questions out there?
Hey, Shunky.
Hi, Kayla.
There's no questions at this time.
Okay, I didn't expect there to be because this is fairly straightforward and fairly straight up. Not a whole lot. It's not terribly complicated by way of concept. But again, if you have any questions, and sometimes, the session is over, or some of you might not be listening to this thing live. So if you're listening to it after the fact, and you're thinking, oh, I've got a question, but it's not live, so I can't ask the question. By all means, you can send me the question by email, and I will be sure to have someone respond to your email, if not myself, somebody else on my team, related to anything related to any of the sessions that I've done. So unless there's something else that came up since I started blabbing, Kayla, anything else?
No questions so far.
Okay, so we're going to call this one a game, and we're going to see you again next week. Thank you, sir.